We've got Canara Bank's Chairman and Managing Director, Mr. S. Raman, joining us on the show. Now that the RBI has cut the CRR much ahead of expectations, Mr. Raman, would your expectations shift to a possible cut on the repo rate when the RBI puts out its mid-quarter review on Thursday?
First of all, one or two comments about the CRR cut itself. A wonderful move and a bit of an aggressive move. Most expectations were centered around 50 basis points. RBI has come out with 75 basis points. And one more wonderful thing is the timing itself. The timing is particularly good, especially in the context of the March 15 deadline for payment of advance tax. It would have resulted in more liquidity crunch from Monday onwards. So it is a very preemptive step to avoid further tightening of the liquidity position. All in all, beautifully thought out and a wonderful move.
All right, and just focusing on interest rates, Mr. Raman, how much do you expect the Reserve Bank to slash rates by?
The important point about it is that the RBI has taken a consistent stand, and rightly so, that the reduction in the interest rates per se will not happen so long as they feel the inflation pressures are still not in control. I would like to think that with the inflation rates coming down month over month and with the last few months, RBI may have a feeling that inflation is finally under a bit of control. If they feel that way, then I would expect 25 basis points cut on the March 15th statement.
Mr. Raman, you know, the CRR cut hands back about 48,000 crores to the banking system. Do you believe it's enough to address the liquidity crunch that banks have been facing?
There are a few things we'll have to see, what is happening with the last 1 week or so. The CD rates were shooting up. Today, of course, some banks had to raise CDs for 3 months at 11.25% and all that. So the CD rates were particularly hardened. So also the bulk deposit rates. What I would think is there will be an immediate impact from Monday onwards on the CD rates and the bulk deposit rates, maybe by 25-30 basis points immediately. The yields on the 10-year GSEC also, I would think that it would get reduced. The yields will go down by between 5 to 8 basis points. So all in all, I think what this measure goes to indicate is and reinforce is the downward trend in the interest rates over a medium period of time.
What's the benefit you see sort of accruing to your net interest margins on account of the CRR cut? Will you pass the benefit on to borrowers?
I mean, it's a bit too early to say. It has just come now. We will have to do some more calculations. But so far as Canara Bank is concerned, we are amongst the most competitive NIMs in the industry. Our NIMs are around 2.6, 2.7 levels, which is not amongst the higher ones. So I would, this is because of the fact that Canara Bank has taken a consistent stand that will give the best deal both on the deposit side as well as on the advances side. So there is not too much of a room for a bank like Canara Bank to immediately do something on the interest rate front. But if something happens on 15th of March, definitely, of course, we will have a very immediate and close look at that.
Right, and Mr. Raman, do you believe that as banks rush to meet their year-end credit growth targets in coming weeks, the liquidity picture could get worse?
There is some amount of latent liquidity in the system, and one reason why, despite the fact that the peak borrowings of under the LAF had gone up to 1,90,000 crores, you still did not see much jump in the called money rates. The reason is the latent liquidity. I mean, many banks have surplus SLR securities almost to the extent of 5% or so. Even the entire system is having a surplus of almost more than 4 to 5%. So that actually enables the banks to have recourse to the RBI and then borrowing money at the repo rate. So that is one reason why there has not been much of an impact. So far as liquidity is by and large tight, but it has not been a sort of an emergency situation which was something like that a few years ago in a similar situation. So right now, even if credit picks up, I do not think there is much of a problem because there is some amount of latent liquidity in the system. Our own bank, for instance, we have almost 4 to 5% more SLR security, so we can access without any major problem. And I think that is true about the system as a whole.
Right. Now, Mr. Raman, the RBI has stated quite clearly that in the absence of credible fiscal consolidation, it will be constrained in its ability to reduce interest rates to meaningful levels. Now, do you expect to see firm action on the part of the finance minister in terms of fixing the fisc next Friday?
Yeah, I mean, I would think there will be a conscious effort on the part of the finance minister to do that. Of course, he is one of the most competent people around, finance ministers in the world. So I would think that there will be some concrete measures to rein in the fiscal deficit. But I repeat what I said, it is not as if the private sector has been crowded out for funds because of the government borrowings. That has not been the fact last year, and I do not think that will be the fact for the next year also.
Mr. Raman, one last question. While inflation has sort of begun to cool off, rising oil prices are posing quite a threat, both to inflation and the government's fiscal position. Do you believe the threat of rising oil prices could potentially lower the pace at which the RBI will be able to lower interest rates?
Well, that is always one of the major factors, and the oil prices have been rather hard recently. So, yeah, that is always a factor, yeah.